chocolate just got a lot more expensive, and the reasons behind it could reshape the entire cocoa market for years to come. But this is also where things get confusing and, for many, controversial. Cocoa prices spike sharply. Cocoa futures surged on Friday, with New York and London contracts both jumping strongly as traders reacted to fresh supply projections. The big driver was a new update from the International Cocoa Organization, ICCO, which sharply reduced its forecast for how much extra cocoa the world will have in the 2024-25 season. Previously, the ICCO expected a global surplus of 142,000 metric tons, but that estimate has now been cut to just 49,000 metric tons, a huge downgrade that immediately made the market more nervous about future supplies. At the same time, the ICCO lowered its outlook for global cocoa production in 2024-25 from 4.84 million metric tons to 4.69 million metric tons, signaling that harvests may not be as strong as once hoped. A weaker US dollar on Friday added fuel to the move, as the dollar index slid to its lowest level in about a week and a half. Since cocoa is priced in dollars, a softer dollar often encourages additional buying and short covering in commodity markets, and cocoa was no exception. Inventory trends and fund positioning. Physical cocoa stocks monitored by the exchange are also pointing in a supportive direction for prices. Inventories held in US ports under ICE supervision recently dropped to an 8.5-month low of about 1.71 million bags, suggesting that readily available supply is gradually tightening. In London, speculative funds are sitting on a sizable net short position in cocoa, which could turn into a powder keg in the right conditions. The latest commitment of traders data showed that funds increased their net short exposure by more than 3,700 contracts, leaving them with nearly 22,800 net short positions, the largest bearish stance in over 4 years. If prices continue to rise, those traders may be forced to rush in and buy back positions, potentially turning any rally into an aggressive short squeeze. Some traders argue that this positioning is dangerously one-sided. Do you think funds are underestimating cocoa's upside risk? Why prices recently hit multi-month lows? Despite the latest rebound, cocoa prices had only just fallen to their lowest nearby futures levels in about 1.75 years earlier in the week. The main reason was optimism about a strong upcoming harvest in West Africa, the world's most important cocoa-growing region. Farm reports from Ivory Coast suggested that cocoa trees are in good condition, with recent dry spells actually helping farmers by making it easier to dry harvested beans. Growers in Ghana have also reported favorable weather, allowing cocoa pods to develop quickly and boosting hopes for a large crop. Chocolate giant Mondelez added to this sense of plenty, noting that the most recent cocoa pod counts in West Africa are about 7% above the 5-year average and significantly higher than last season. The main crop harvest in Ivory Coast has just started, and local farmers are generally upbeat about both the size and quality of this year's output. Here's where it gets controversial. If the crop really is this strong, are current price spikes overdone, or are they simply catching up with earlier supply damage? EU deforestation rules delayed. Another factor keeping a lid on long-term supply fears is regulatory. The European Parliament has approved a 1-year delay to implementing its deforestation law, which was designed to restrict imports of commodities linked to forest loss, including cocoa and soy. This delay means that, for now, EU countries can continue importing agricultural products from regions in Africa, Indonesia, and South America where deforestation is still occurring. In practical terms, that eases immediate pressure on cocoa exporters and helps keep global supplies flowing. But this raises an uncomfortable question. Should cheaper chocolate today come at the cost of delayed environmental protections? US tariff changes and Brazilian supply. Cocoa prices also face headwinds from recent US trade policy decisions. In mid-November, the Trump administration removed a 10% reciprocal tariff on commodities not grown domestically in the United States, a list that includes cocoa. At the same time, the administration scrapped a 40% tariff on certain food imports from Brazil. Brazil ranks among the top 10 cocoa-producing nations, so making its food exports, including cocoa-related products, cheaper for US buyers could further support supply availability and put some downward pressure on global prices. Ivory Coast arrivals show slight decline. Even with talk of big crops, shipment data from Ivory Coast tell a more nuanced story. Government figures show that from the start of the new marketing year on October 1st through November 23rd, farmers delivered about 618,899 metric tons of cocoa to ports. That is roughly 3.7% less than the 642,500 metric tons shipped during the same period a year earlier. Given that Ivory Coast is the world's largest cocoa producer, Even a modest decline in early arrivals can unsettle traders who are already wary about the delicate balance between supply and demand. Demand weakness, a major bearish force. On the demand side, the picture is far from rosy, and this is the part most people miss when they only look at supply. Sluggish global appetite for chocolate and cocoa products has become a key bearish factor weighing against price rallies. At the end of October, the CEO of Hershey described Halloween chocolate sales as disappointing. That matters because Halloween accounts for nearly 18% of annual US candy sales, second only to Christmas, so a weak season can signal broader consumer softness. Regional cocoa grinding data, a key measure of how much cocoa is actually being processed, also highlight demand strain. In Asia, third-quarter grindings fell about 17% year-over-year to just over 183,000 metric tons, the lowest level for a third quarter in 9 years. Europe, another major consumption hub, saw third-quarter grindings decline by around 4.8% year-over-year to roughly 337,000 metric tons, marking the weakest third-quarter reading in a decade. North America technically showed a 3.2% year-over-year increase in grindings to about 112,784 metric tons in the third quarter, but that rise was partly due to the inclusion of additional reporting companies, making the comparison less straightforward. Meanwhile, real sales numbers tell a darker story. Over the 13 weeks ending September 7th, volume sales of chocolate candy in North America dropped by more than 21% compared to the same period a year earlier, according to data from research firm Circana. This raises a tough question for the industry. If consumers are cutting back this sharply, how sustainable are high cocoa prices in the long run? Nigeria's production outlook. One supportive factor for prices is Nigeria's production trend. As the world's fifth-largest cocoa producer, Nigeria plays a meaningful role in the global supply landscape. The country's Cocoa Association expects Nigeria's 2025-26 cocoa output to fall by about 11% year-over-year, down to around 305,000 metric tons. That would be a drop from a projected 344,000 metric tons for the 2024-25 season, signaling that supply from this origin could tighten in the coming years. For now, though, Nigeria's near-term export figures look stable. The country reported that cocoa exports in September were essentially unchanged from a year earlier, at approximately 14,511 metric tons. From massive deficit to first surplus in years. Stepping back, the global cocoa balance has been through a dramatic shift. On May 30th, the ICCO revised its estimate for the 2023-24 global cocoa deficit to a huge 494,000 metric tons, the largest shortfall in more than 6 decades. The organization said that world cocoa production in 2023-24 fell by about 12.9% year-over-year, dropping to 4.368 million metric tons. As a result, the global cocoa stocks-to-grindings ratio, a key indicator of how comfortable or tight supplies are relative to demand, slid to 27%, the lowest reading in roughly 46 years. Against that backdrop, the ICCO is now projecting a return to surplus in 2024-25. It expects a global surplus of around 49,000 metric tons, marking the first time in 4 years that the market is not in deficit. The ICCO also forecasts that global cocoa production will rise by about 7.4% year-over-year in 2024-25, reaching 4.69 million metric tons. This improvement reflects expectations of better harvests in key growing regions, especially in West Africa, though many analysts warn that weather, disease, and political risks could still disrupt these projections. Disclosures and neutrality. The original analysis notes that the author, Rich Asplund, did not hold any direct or indirect positions in the securities discussed at the time of publication. The article is presented solely for informational purposes, and readers are directed to consult Barchett's disclosure policy for more details on methodology and potential conflicts of interest. A few big questions for you. Putting it all together, the cocoa market is caught between recovering production and uncertain demand, with policy shifts and speculative trading adding extra volatility. Some believe the move back to a small surplus means prices should calm down, while others argue that years of deficits and structural risks justify much higher levels for longer. So what do you think? Are current cocoa prices justified, or are they being pushed up too far by speculation and fear? Should the EU have delayed its deforestation rules, or is this a step backward for sustainability in exchange for cheaper imports? If chocolate demand is actually weakening, will that eventually overpower all these supply concerns? Share whether you agree or completely disagree with the idea that cocoa is entering a new, structurally higher price era. This is exactly where opinions start to clash, and your perspective might challenge the consensus.